Well, I think Chairman Powell has got a very challenging job. There's tremendous uncertainty with COVID in China and the war in Ukraine, but I think they're doing a very good job of pivoting and getting to neutral much faster. 75 basis point rate hike today. They've got more to do. You're looking at inflation right now in the United States over 9%. You're looking at a very strong labor market. And so with inflation still significantly above their 2% target, our sense is they're going to have to go 50 likely at the next meeting. That's September 21st. There's two more meetings after that, probably another 25 basis points in each of those. So there's probably at least another 100 basis point of rate hikes. The good news, though, is that you have to look as an investor for this lead-lag relationship. These higher rates and the faster pivot, the persistently high inflation has caused not just the Federal Reserve of the United States, but central banks around the world to have to raise rates much faster and get to neutral faster and even go restrictive. This is slowing the economy. These higher interest rates are having an effect on housing. The strong dollar is having an effect on earnings. The higher inflation is actually causing consumers to pull back. So you are seeing a pretty significant slowdown in global growth. And that's really the trade-off that Powell has talked about.
Sure. But again, I mean, as we were just talking about a moment ago, there are multiple factors in this conversation. I'm just, from what I'm hearing you say, you haven't changed your perspective on where the interest rates are headed right now on the back of what he's just said. And as a consequence, you're still thinking that a recession is a possibility.
Well, I think recession is a higher likelihood, just given the fact that inflation around the world has stayed far more persistent. You're seeing that not just in food and energy prices, but you're seeing that in the labor market strength with wages. You're seeing that with rents. So this persistently high inflation has no question caused global central banks to have to pivot. And that has raised the recession risks. In terms of from an investment perspective, let's not forget, though, that the 10-year Treasury has rallied in 6 weeks, 73 basis points. The 10-year German Bund has rallied 84 basis points in 6 months. So there has been a significant rally in bonds, and that's a function of the fact that global growth is slowing. These higher rates are having an effect. You are seeing that in terms of the dollar, as I mentioned. And so all this monetary policy and the fact that fiscal policy is far less stimulative now, it is impacting the economy. So we're looking for below trend growth ahead, and that ultimately will bring inflation down. The question is how quickly will inflation come down fast enough? And that's why there's still uncertainty in the marketplace.